Okay, I think we can start now, and then more people will be tuning in. Let me just kick this off. Thank you so much, Noor, for giving the time, and Margaret for moderating this session. Just to give a hint about this, Endeavor Egypt launched a series of virtual webinars with members from our network to discuss different topics that are relevant to the global macro conditions, shed some light on global trends and opportunities, and share inspiring stories. It's focused on the Middle East and Africa region, and not only on Egypt. We actually have audience today from more than 20 countries, so that's really exciting. This is our third webinar, and we're very pleased to have Noor Sweid, founder and managing partner of Global Ventures, a UAE-based Series A focused emerging market VC firm with presence in Egypt, Saudi Arabia, and Nigeria, with $300 million assets under management and financial returns, rating it as a top decile fund. Global Ventures has become a leading investor across the Middle East and Africa. And joining us today to moderate this session is Margaret Pollack, Director and at Endeavor Catalyst. And Margaret oversees investments across 37 countries that Catalyst invests in. Looking forward to an exciting session. Please make this an interactive session as much as possible. Noor and Margaret will chat for 20 minutes, and then the floor will open up for questions. And Margaret, over to you.
Thanks, Ali. And Noor, thank you so much for being here with us today. I'm really thrilled to be having this conversation with you, and really grateful to you for taking the time to join us all today. I think to start us off, to get to know you a little better, I was looking into your background, your bio, and you have an incredible background with experience as an entrepreneur, all the way to taking a company public, time in even the public sector as a CIO. And I even heard in a podcast that you said you wanted to be a lawyer when you were younger. So I was curious if you could share with us all what makes you the most excited about venture capital as an industry, and specifically venture capital in the Middle East and African markets that you guys operate in.
Sure. Thank you, Margaret. Thank you for having me. Thanks, Adi, and everyone for joining us today. I think there's a couple of things when I think about venture capital, right? And I'll answer your question very directly in terms of what makes me excited about VC. Which is, I think VC has two angles to it. You're either an investor or you're a founder supporter, right? And you can be both, and that's the job of the VC. And I think that VCs skew very much towards one side or the other, depending on their background. So coming from an investment background, one really attributes the principles that they've learned during their career as an investor, as a banker, in transaction one, into let's do deals. I want quarterly board meetings. I want updates. And then you behave as an investor. And that's really great. But I think in our part of the world, a lot of the founders are first-time founders. The ecosystem's incredibly young. So last year we had $2.6 billion invested across MEA, all deals all year. I mean, that's one fund for some random VC firm in the Bay Area, right? As our entire ecosystem. So you start to think about that, and you're like, as a VC, the position that I take is very much, I'm on the founder side, and there are no sides, but I'm on the founder side. Right? So it's very much like we want to invest in founders, we want to enable them. There's a large part of the job that is about supporting founders. Our team, the first thing we built was a value creation team. And how do you really get in there and work with these founders to take them really from a local best in class to a global best in class? Because they're able, it's just maybe they've never seen it before. They don't know what good looks like because they haven't had those experiences. So we're very much a founder-led VC firm. And I think I come to that from the conviction that I'm an entrepreneur. My background, as you mentioned, I was never really a professional investor. And I take a view of this as, I founded Global Ventures just over 6 years ago. And the reason I founded it was, as an ecosystem, we have a massive problem with access to capital for founders, specifically access to strategic capital, but just access to capital in general at large. The year before I founded the firm, the ecosystem was $400 million, all MENA, all year. I mean, now we manage close to $400 million. So you take a view and you're like, there is a fundamental problem in the ecosystem. The problem is access to capital. The way to solve that problem is to get more strategic capital into founders' hands that can scale and exit and get those financial returns. We need to prove our ecosystem, but that happens to be called VC, right? So for me, I fell into it much more from I want to support founders and it happens to be called VC, rather than I want to be an investor and this is a great place to do investments because the ecosystem beyond. I don't know if that answers your question. I think it does.
It does. Very helpful and enlightening. And I want to get more into kind of how you guys think about your investment thesis, where you're seeing the market currently, and some themes and trends. But I think maybe taking a longer view here for a moment to start and ground us. You've been living in Dubai, I think, for more than 25 years now. Really curious what the biggest changes and differences you've observed in both VC and kind of the city and region at large over those years have been. So I think sometimes that helps to kind of take that longer view as we think, kind of dive deeper into the past couple years, more specifically later on. But would love to hear kind of over the long term what you've seen those major changes and differences be.
Yeah, so Dubai has indeed been home for 29 years. So when we came here, I tell people Sheikh Zayed Road as a 10-lane highway didn't exist. And we took Beach Road, for those that know Dubai, all the way from Deira to Sweid in Dubai, and that would take us all of 20 minutes, which I think if you were to do that exercise today, it would be over 2.5 hours. And we used to take the Shindaga Tunnel and all these places that, people, even I, don't really go anymore. So I think the city has really changed, but I think that the city has really put the region on the map a little bit more, right? In that it became a tourist destination. People would come here, they would hear about Dubai, they would see it, they would start to understand more the UAE, and then broader and broader. And I think that's really, really fundamental in this part of the world. We moved here in '95 because my dad's an entrepreneur. And at the time, His Highness Sheikh Mohammed bin Rashid had a vision of building the first 7-star hotel in the world, which was Burj Al Arab. And my father, being an entrepreneur, was just like, I want to go do that. My father's in the interiors world. And so we moved here because of entrepreneurship, because of the leadership having these amazing visions of this is what we want to build, the leadership being able to communicate that vision with private sector, which they still do through D33 and the majlises and so on. And then the private sector being able to play a part and build companies in order to help the country achieve its vision, right? To work with government. And I think all of those things have enabled the UAE and Dubai to really leapfrog and be ahead of the curve. But it all starts with the visionary entrepreneurship of His Highness saying, I'm going to build something here that, not everybody would believe in tomorrow. It would take a visionary to say, I'm going to build the first 7-star hotel in the world. I'm going to build a tourist destination in the desert. And then I'm going to build a financial center. And now I'm going to build an innovation center, right? And then the entrepreneurs that are required to have that gut and that grit and that ambition to come in and work the private sector to do that. So I think, what I've seen in Dubai, what's changed is the different ways by which it continues to reinvent itself.
Mm-hmm.
However, the thought of reinventing itself and having these amazing visions and then the entrepreneurs and private sector come in and help build those remains the same.
That's awesome. And I think you touched on something really interesting there with the government incentives that I want to hopefully get to a little bit later on in some of the questions. But I think before we get there, can you share more with everyone a little bit more specifically about Global Ventures investment thesis, how you guys think about your investments and what your strategy is broadly?
Sure. So we invest across the Middle East and Africa.
Okay.
We invest across Africa, sub-Saharan as well as North. So we do quite a bit in Nigeria, Kenya. We also do a lot in Egypt and Saudi and the UAE, Pakistan. We don't discriminate on geography because we find, ironically, that our fund life is longer than any geopolitical stability in the region. So we need the flexibility to go wherever it makes sense. Fund 1 was a 2018 vintage, $50 million. All of our funds are Series A mainly with a little bit of flexibility. All of our funds are sector agnostic. However, I believe in thematic outperformance, as we've seen with the data globally. So every few years, we take a position on a certain industry or two right now, where we feel that these industries are at inflection points. And that is often a triangulation between what's happening macroeconomically, what's happening in seed stage, what's happening with regulators. And again, here the governments are very open about what they're thinking. So it's wonderful. It's not rocket science. So for us in 2018, we took a view to fintech.
Mm-hmm.
And at the time, there was no research on fintech, nothing in fintech. We ended up writing 85 pages on fintech in the region, putting it on our website just so our LPs could understand. And that became a really great lighthouse for founders because they would see the research, they would understand that we'd done the work, and they would approach us. And 40% of Fund One became fintech.
Mm-hmm.
And then we started doing a lot of research and data analysis, and we have an in-house research team and data analysts. And then we came to raise Fund Two and do Fund Two, and we happened just by chance in January 2020 to put out 130 pages on health tech. You can find all this research on our website. And then in Feb 2020, we did our first investment in health tech, which was a company called Helium Health in Nigeria. And then in March 2020, there was a little pandemic that kind of hit the world called COVID. And suddenly we were everyone's like go-to investor. People say they understand the region, they understand health tech. And our view to health tech was that similar to fintech, how it enabled financial inclusion, health tech was going to enable healthcare access, which the region, huge market, low regulatory hurdles because no one's solving the problem. The number of doctors per 1,000 is less than 1. Europe's at 4.5. So we're never going to have enough hospitals or clinics or doctors. So let's get over it and just see what we can do with tech. And that was our thesis. And then COVID hit. So we ended up raising Fund Two, putting 40% of that in health tech and the rest agnostic, and realized that that was actually a really good strategy. In the meantime, towards the end of 2021, we structured 4 exits. We just felt that the market was really hot. There were secondary opportunities, and we just took them. And that really enabled us then to prove that the region can exit and make really good money. And that put us in that top decile globally on DPI to DPI. We didn't sell any of our winners. It was great. And then we took a view to, what next? And every quarter we put out research reports on different industries. And so about a year ago, we started to see a massive move in supply chain tech, post-COVID related, but like this is permanent, it's not a fad. And also in terms of food security and agri-tech. And we realized that these are 2 industries that the question we always ask ourselves is 5 years from now, how does this industry compare to 5 years ago? Right. And that to me qualifies as an inflection point. So in 2018, you could say with very high certainty that by 2023, fintech would look nothing like 2013. Regulators are on board, companies were in seed stage, other markets had done it, not rocket science. 2020, you could definitely say that by 2025, health tech looks nothing like 2015. And not just telemedicine, but remote diagnostics, pharma, personalized medicine, preventative, all of it was really, really hot. And we've seen that now pick up hugely. And now you can say that in 5 years, there's no way in 2029 we're feeding our part of the world the same way we did in 2019. When things like vertical farming were proof of concept, now they're commercial. They're being adopted by masses. In 5 years, that'll be how a lot of these parts of the world with food insecurity eat. And you take a look at other things like sustainability and so on. And same with supply chains. The way we manufacture, the way we ship, we think 5 years from now is different. So whereas we are thematic temporarily, right, it's very much based on the concept that just like in public markets, you have multiple expansions in different industries over a different period of time. The same applies in private markets. And it's a factor of where is capital going to enable entrepreneurs to solve which massive problems. So that's what we invest in, 60 companies in the portfolio, 6 exits. Our last exit was in November. So that was a really good exit as well. We exited part of our Series A position in Tabby. So that was 100% IRR, first fintech unicorn in the region. We kept our Series Bs. We have massive conviction in the company, but it meets its marks for our return profile. The firm is 22 people. We're on the ground in Cairo, Lagos, Riyadh, Dubai, Abu Dhabi. That's what we do.
So interesting. And I think the inflection point around kind of that thematic, the research side of it is really interesting. And I think as you guys think about kind of the inflection point of various themes and industries, this is something we think a lot about at Endeavor as well. And at Endeavor, as you know, we're in kind of 42 markets around the world. And we spend a lot of time mapping and thinking about waves of innovation in each of our markets and kind of the unique circumstances in each of our markets that make sort of different, them prime for different kind of stages of development. So I'd be really curious, as you guys think about the Middle East and Africa, the markets that you have kind of from Nigeria to Egypt to Saudi to the UAE have lots of different dynamics. How do you guys think about the differences in these markets? and your approach to sort of this thematic investing in all of these different markets.
So each market, as you pointed out, has very different dynamics. Like Saudi Arabia has its own market, and founders in Saudi are building for Saudi. And Saudi specifically has so much catching up to do in terms of infrastructure build. For example, healthcare being a great example, health tech has to adopt, right? Fintech has to adopt, manufacturing has to adopt, right? And just for Saudi to catch up with where it could be, it is a huge market opportunity in itself, right? So a lot of founders in Saudi are building for Saudi, and that's wonderful. Right? We see very few founders building in Saudi for outside Saudi. And so when we take a view to those markets, that's very important. Then you have Egypt, right? Founders in Egypt build for the region. So they build for Egypt first, and then we see them properly expand into the UAE and Qatar and Saudi and Jordan, right? And they're regional plays, and the tech is second to none. And they're tech first founders, and then those are great companies. And then you have, for example, Nigeria. Nigeria builds for Africa and the Middle East. So two of our companies in Nigeria actually now are massive in Qatar and in Saudi and UAE. So we've seen them expand. They're solving the same problems as the region. They're just solving it with less of a regulatory hurdle, with more dire need. And so they come up with different creative solutions. And I think the UAE founders increasingly are solving for the world. So I think this has genuinely become a hub where it's UAE goes to US or Europe and sometimes Saudi, right? But the investments we're making out of our third fund now, the UAE ones over the last year, are all kind of, start the company, build a product, global market, done, right? And there isn't even this, I want to own the UAE first. So that leapfrogging we've just seen massively. I think it comes as a combination of the influx of talent recently, the lack of copycat syndrome anymore, right? So you kind of see this growth into, I'm going to build a product from Dubai into the world. And that seems like a very reasonable expectation these days.
Yeah, it's interesting. And I think, the distinction that you described with entrepreneurs in Saudi building kind of for Saudi, we've seen a really interesting dynamic at Endeavor over the past year or so, with a lot of our entrepreneurs from around the world turning their eyes and attention towards the Middle East, Saudi in particular, but also the UAE to a large extent as well. And curious how you're viewing this, what you're attributing it to, and what advice you would have for founders who are either looking to expand to there, raise capital from there, and are seeing this as a new market, a new frontier for them.
I mean, I would say the more the merrier. So everyone should just come on over. But what we often warn very, very optimistic founders, which is the job, is these are really long sales cycles, right? Longer than you've ever seen in your life. In terms of any B2B or SaaS or, that adoption is just, it's not like the US or Europe where people will make a decision in 2 weeks. It take 2 years, right?
Yep.
I think people need to be ready and prepared for that. And the advice I always give people as well is there is no such thing as a bad meeting. Right? And I think that's very confusing to people, especially founders coming from abroad, right? So if you're in the US, your first meeting is yes, no, maybe. Your second meeting is yes, no, maybe. But by the third meeting, there's no more maybe, right? It's either yes or no, and you're done. Here, you can really get to meeting number 30 and still be on, yes, of course, this is a wonderful idea. We're going to do it, right? And it's not the lack of commitment in the region. My conviction is that our culture values optionality incredibly highly. And as long as there's no cost to the optionality, then people will take it. And that's really where I think people struggle, is that they don't know why it takes 2 years to close.
Yeah. That's very helpful and insightful. I think switching gears a little bit to, I feel like what has been kind of the topic of the last 18 months, but the state of the market. And I think that there will be kind of a lot of questions from the audience on this also as we switch gears here. So I'd like to encourage everyone to kind of post any questions in the chat, and we can move to kind of take questions from the audience as well. But to start us off, the past 4 years have seen a number of market shifts, from a global VC peak in 2021 to a global macro correction in 2022 and into 2023. From where we are right now, kind of starting out 2024, where do you see the state of the VC market in the region, from the perspective of an investor?
I'll say the obvious, and then I'll give my insights. So the obvious is that we always peak 6 to 12 months after the rest of the world, which led us to our hottest year in VC ever was 2022, when everyone had a massive oh my God, this is the worst year that we've seen in decline in history.
Yeah,
so we had a wonderful 2022. Similarly, we had a wonderful 2008. Right? So I go back to kind of my memories. So I IPO'd our business in April 2008. And 2 months later, we had the global financial crisis. Right? Except that didn't reflect in the region until like mid 2009. So there's this massive disconnect on down cycles. The bigger disconnect to the massive disconnect is the up cycle. Which the rest of the world, 12 to 18 months after a correction, kind of like the US and Europe now, are like, all right, fine, we got it, we've stabilized, we're going to go right back up. And 3 years from now, you'll see the US and Europe and those parts of the world on a huge upcycle.
Yep.
Right? The region takes an extra year. Right? So that's kind of like global VC macroeconomic landscape. It's just the way it is, right? And it's like, it's the last money to come into anywhere in the world is the American capital coming into the region, right, on an up cycle. It's the first money to disappear on the down cycle. And then because it's the last money on the up cycle, that creates this lag in the region. So our down cycles are longer than our up cycles on a proportionate level compared to the rest of the world. So we just started our down cycle. So last year was $2.6 billion instead of $3 billion a year before in venture. Which means that we're lagging behind the rest of the world. However, I am very, very optimistic, right? And I think that, I don't think it's going to go down anymore. I think that this is it, we've stabilized. Next year, we're actually going to see an uptick. The companies we're seeing are amazing. I just think that there's been a fundamental shift in venture globally, where it's no longer like US 95% and the rest of the world 5%, with, China being the largest part of that. Now it's much more like people are curious what's happening outside the US. People want to take a look. Russia is still difficult to invest in. China is still difficult to invest in, which suddenly puts us as like, the third or fourth choice rather than the seventh choice. And I think that once people have realized that over the last year and a half, and they start looking at the region and they take the time to get to know the region, they're very impressed. And then you have more and more capital coming in. So, we as a firm have always had half of our capital coming internationally. So we have a lot of institutional LPs now in Fund 3 that are based in New York, that are based in Geneva, that are, some of them are some of the top LPs in the world. And they're institutions. And so you end up, that would have not been possible 5 years ago.
Okay.
Right. And so we've seen this massive shift. I think of it as permanent capital comes to the region. And I think the region's proved that it's competitive, that you can exit, that you have great, sophisticated founders building amazing companies.
It's so interesting to hear you talk about sort of the lag that you see in the region as it relates to, call it, in the VC tech world, call it Silicon Valley. But also that's, the public markets more broadly. And that's something we saw, really interestingly at Endeavor, since we are covering kind of 42 markets around the world. It was really interesting to see the ways in which the pullback happened at different times in our different regions and at different times in Southeast Asia, which also was, originally slower to pull back and has now been slower to rebound. Whereas Latin America was much, the pullback was much more immediate, and they've actually kind of seen more of a resume in later stage investing more quickly than some of our other markets. So it's interesting to hear you talk about that kind of specifically for the Middle East and Africa region. switching gears from the perspective of the investor, for founders looking to raise in the Middle East and Africa in the next year, what advice would you give to them? How do you think sort of in the investor mentality in the region has changed, as well as sort of the global investor mentality deploying in the region, that they should be aware of as they think about kind of their business and potential fundraising in the coming year?
I mean, I think fundraising is never easy. Right?
Mm-hmm.
Good cycle, bad cycle, it doesn't matter. It's never fun and it's never easy. I think founders do incredibly well in the region, given the lack of capital compared to other markets.
Mm-hmm.
What we've seen work in the last 6 months is as founders create extensions to their last rounds at the same valuation, but the company has matured, the unit economics make more sense, right? So I think that is what I'd advise any founder is, even if you did around a year and a half ago, and yes, your company is 10 times more fabulous, get yourself a couple $1 million or whatever it is to give yourself another 18 months of runway at that valuation to wait for the market to turn. Yeah, but the truth is you can never time markets. So you might have to do that. And then still in a year and a half or 2 years, raise at a valuation you don't like. The other option is become profitable. So we have about a quarter of our portfolio, just over a quarter, is EBITDA positive. And so those founders never have to think about raising. I mean, they raise because they want to grow faster, but it's never fun to raise as a matter of survival.
Yeah, that's interesting. We have a couple of questions in the chat from the audience, so I'm going to switch over there. And if other people, have questions, please continue to send them through. The first question is, I think maybe zooming in, we talked about how kind of all of, the markets that you guys covered, there are unique differences. So zooming in, how do you see Egypt specifically, kind of given the current macro conditions? And, Egypt is a market which has had a lot of unique particularities in the past couple of years, particularly kind of with the currency and everything happening there. So I'd be curious your perspective on that market specifically.
I mean, I've always loved Egypt as a market. I know that most people, including me, find it really hard to make money there, right? And so I think it's a really interesting market because, again, they built first for Egypt and then for the region. We have some incredible companies in Egypt. So from Yodawi to El Menus to Al Munir, our portfolio in Egypt is really strong and solid at PayMob. So we're the largest shareholder in PayMob. So for us, Egypt is a very, very dear market. We understand it, we believe. Some of the companies I just mentioned have gone regional. I remain excited about Egypt for the obvious demographics, opportunity. I just think that if you're building in Egypt, it should be for Egypt. And then if you can go regional, that's wonderful. I also think that building solutions for basic needs tends to work a lot better than anything else. And I think, of course, it's currently a wonderful cost center to have teams in. It's like the best talent for the region sitting there. So, there's lots of pros and cons. I think it's really about finding a business model that works regardless of the currency fluctuations.
We're getting some questions kind of on other specific markets, which I think we can get to in a second. But one question that I think would be interesting to answer live with you, thinking about a lot of companies in the region that have bootstrapped their way to profitability over 10 years, how to think about those founders potentially taking some money off the table and a fundraising strategy for that type of company in this market.
I mean, I would say it depends really on the industry or the sector. So that's something that's more acceptable in more traditional sectors. I think if you're taking money off the table, you're more likely to attract a private equity player that is looking for a larger minority or even a majority stake that is happy to roll out their sleeves and get involved. And even if you want to get involved as a founder, I think that unless you're running a $300 million business, it's going to be hard to convince a VC that you're going to stick around after taking money off the table. Whereas a private equity investor might say, yes, we know you're going to stick around for 3 or 4 years, and that's how we'll phase you out, and right, and they will have that full acquisition in mind. So it's a very, very tricky one. But we have a founder now taking some money off the table in one of the rounds, and all the investors were properly unhappy, right? Because we're not taking money off the table. So I think that, that goes hand in hand.
We have a question here about sort of how you're thinking about North Africa. We hear a lot that funds are having MENA as a playground, but it seems that North Africa is more Egypt than other markets. How do you see Morocco and maybe more broadly sort of other markets in North Africa and their role in the region as well?
I think all the markets here have their strengths, right? But I think one of the things that we really look at is how hard is it to kind of get your money in and out of a country. And that's kind of the biggest challenge in some markets, right? So I think that's number one. Not that it's easy to get your money out of Egypt, but it's easier than Morocco, right? So it's about how do you rank these things. I think, Morocco's a very interesting market. We've looked at a lot of companies there. It's just, again, it has to prove that it can be regional. Right? So Egypt, I believe, has now proven that, companies built in Egypt can easily be adopted in the rest of the region. And that then gives you that conviction. I think Morocco, maybe by geography, maybe by history, tends to look more northwards towards Europe. And so a Moroccan founder is more likely to expand into Spain, if you will, than into Saudi, right? And as a result, that's harder for an investor sitting in Dubai or Egypt to understand. Because neither Morocco nor Spain are markets that we invest in or actively in Morocco or understand. And so I think investors are always comfortable in investing in things they understand. I always say that when it comes to convincing someone, even me, right? Like one of my biggest strategies when it comes to fundraising or convincing people is the one variable rule. That as long as people are comfortable with everything and there's only one variable, it should be a sell that you can close. The minute there are two variables, it's really, really hard, at least for me. And so a founder in Morocco saying, I already own Morocco and I want to take a look at a market that you, dear investor, understand, right? And us saying, we don't really know Morocco, but we're going to trust you, is very different to a founder saying, I own Morocco and I can't vet that as I don't know Morocco that well. And I want to go into Spain. And I don't know Spain either, and I can't do that. And suddenly I'm like, these are two variables, two unknowns, and the founder new to me. It's really, really like the level of comfort I have to get is going to be something that's unlikely to achieve. So I think that that's what happens in North Africa, right? And that's just the way it is. But would love to see more deal flow from Morocco. I think that would be awesome.
That's great. Okay, we talked a little bit about founders from our other markets. But when I asked this question, I was thinking more about, founders from LATAM and the US who are eyeing sort of regional expansion to the Middle East. This is, a question from about, a company in South Africa looking to expand, either regionally and or globally. What advice do you have kind of for founders in the region to also access other markets in the region?
I'll speak from personal experience. So I joined our family business, the business my dad founded in 96 when we moved here in Sweid. I joined in 2005. It was an interior contracting. So fit out an FF&E for anyone who's ever done their home. It's effectively fit out and then all the furniture. And we would do that for hotels and infrastructure. So think the world's first 7-star hotel, all the way to the airports and so on. When I joined, the company was in the Gulf and in Egypt. We were in 6 markets, but not Saudi. And we had 1,000 people and we had $60 million in revenue, 60. And I joined for many reasons. I did a private placement, I put a board, I put governance, I strategized, a growth plan to IPO, and all this stuff was amazing. And the big elephant in the room was Saudi. And we were 8 MDs in the company. And strategy and growth was my job. And I'm like, we're not doing Saudi. And I would have fights with the operations directors. And they said, well, how are we going to grow? I said, well, we're going to go to Singapore. And they would thought I was a nutcase. I mean, the beauty about being young is you're naive. And the beauty about being naive is you're courageous. And then the beauty about being courageous is it might actually work. And in this case, we were lucky and it worked. And I said, it's really simple. It's return on effort. And then it's payment terms and my cash flows. And a project that we were going to take in Saudi would take so much effort to sign and to close. We would get paid in a way that we were cash flow negative throughout the project. We may or may not make profits. We were struggling in the region. Whereas when I go to Singapore, my sales cycle is like a quarter just because of the nature of that market, right? My payment terms are milestone instead of percentage completion, which would mean that I'm paid so I'm cash flow positive throughout my project. Our first project in Singapore was the Marina Bay Sands. Right? And then India, and then Azerbaijan, and then Angola, right? And we never entered Saudi. I left the company in 2013. We still hadn't entered Saudi. The company stayed public for 10 years after we left and was taken private last year by PIF so that I could help build Saudi, right? But ultimately, I think like with any market, if you're sitting in South Africa and you're taking a look at the UAE or Saudi, unless there is a very strategic reason or a strategic partnership, you should take a look at those markets the same way you would take a look at India or at Singapore or Spain. I don't know, right? But it shouldn't be that like, oh, this is the region that's closer, it's easy, it's everyone's there. No, it's just like any other market. Take a look at what is your return on effort. Sorry,
Yeah.
I know I should be pitching the region, but I tend to be very honest when it comes to founders.
No, that's so interesting. And I think tying it to your personal experience is so helpful to hear. And just kind of takes it back to first principles, even in a way that is very helpful and grounding. I think this question will be really interesting. And, Noor, you have incredible experience in the region and optimism about the region. This question is, we've seen regional investors refuse to invest in Egypt without the startup having foreign revenue, some way to kind of mitigate some of that macro risk. How do you think sort of your mindset is different from other VCs in the region? And I would add to that even globally, how you think sort of other investors right now are thinking about different markets in the region, specifically Egypt, and or kind of other VCs in the UAE and Saudi.
So the question is, how are investors thinking about Egypt and why are we thinking about it differently?
And how is your mindset potentially different?
Well, I think, anyone's mindset is an accumulation of their experiences, right? So my experiences include kind of when I joined the family business, we were 60 million revenue, 1,000 people, 6 markets. 3 years later, we were 600 million revenue, 9,500 people, 22 markets, the biggest in the world. I wanted to IPO. The board told me to wait. I was lucky enough that we didn't wait, and we listed in April 2008, as I mentioned. And we listed on the LSE and the NASDAQ Dubai, first company in the region listed on the LSE. So we broke so many firsts without thinking. The objective was not to break any firsts. The objective was just to build a cool interior company, right? And it became the biggest. And we were just lucky we had $400 million in cash on the balance sheet when the world crumbled, or we would have gone bankrupt like every other contractor. But instead, I was able to spend 5 years doing global M&A. Right. So it was literally just like this opportunity to acquire companies around the world that were in adjacent verticals, run a public company, compliance, all the stuff. So when I came to raise Fund 1, many years later and many journeys later, which, happy to share anytime if they're relevant. When I came to raise Fund 1, and I tell people, we want to invest in regional companies that scale globally, right? Which is half the portfolio. We aim for that. the region wouldn't invest.
Mm-hmm.
They would tell me, Noor, you've lost the plot. We don't have innovation. We just copycat.
Mm-hmm.
And they would say, Noor, we don't have founders here that can build global companies. I'm like, wait, but my father was a founder and we did it as a family. And if you can do it with 9,500 boots on the ground in 2025, you can do it in tech. And people still wouldn't believe. My first believers in Fund One were people who had started other VC firms in the US 25 years ago. They were just like, you know what? You sound as crazy as we did back then. And they gave me money. And once we had enough capital to start doing deals, then the region invested.
Mm-hmm.
We were their first fund in the region.
Mm-hmm.
They invested out of their European fund of funds because they didn't even have a mandate for the. But it was only after this conviction from people who've done it for much longer in other markets and could get really comfortable with it. And so I would say the same thing. My mindset's a bit different because I've built kind of an interior contracting company and IPO'd it by just like, that's my journey, right? And I can take those same principles and say, if we could do that, anyone can do anything. I might not understand the problem that the founder in Egypt is solving, but tell me about it, right? And just because I don't understand it, it doesn't mean it doesn't exist, and it doesn't mean that we can't help.
Yeah, it's very true how different kind of our mindsets are informed by our experiences, but it's really interesting and helpful to hear. You touched on Mubadala, and we have a question in the chat about sort of the role that some of the sovereign wealth funds are playing in the region, Mubadala, ADIA, PIF. And you touched in the beginning kind of when we were talking about sort of why your family even moved back to Dubai and some of the incentives at the time. I'd be really curious to hear how you think about sort of the role of the sovereign wealth funds in the region and some of the government incentives in helping to reinforce and bolster up the ecosystem, and how you view kind of some of those initiatives that are going on.
I'm very excited about them. Even every ecosystem, you take a look at Europe, 70% of capital across first-time funds comes from endowments, sovereigns, right? Pensions, the same is true in the US. I mean, no one talks about this, but it's, most fund ones are raised from government supported initiatives, right? I think it's really hard to make money in venture backing entrepreneurs in young ecosystems. And the entrepreneurs are necessary, and the ecosystems are necessary, and they are the backbones of society, and they create jobs. I mean, just taking a look at it, VC-backed companies create 2.8 times as many jobs as non-VC-backed companies. So you want to create jobs, get companies to be VC-backed, but that means you need VCs, which ultimately don't exist without, capital from sovereigns and endowments and pensions. And so I think all of it is one ecosystem. You cannot only solve for one part of the ecosystem. You have to solve for all of it together. The accelerators, so you have the right entrepreneurs, the VCs, so you have the right strategic capital. Right, and I think it just goes together. I think it's wonderful that the governments are involved.
Yeah, it's interesting, and I think another thing that we have begun to hear a lot more about at Endeavor also, and we have some experience with this historically, but more and more companies kind of seriously considering going public on a regional stock exchange, and some more legitimate efforts kind of within local markets to bolster those regional stock exchanges to make them more attractive for local companies. We have examples of this. We've seen this play out in Brazil and Indonesia historically, but there's still like a limited track record of examples of companies, of technology companies doing this. But there's a lot of talk about this in the Middle East right now. So I'd be curious if you could share kind of how you're viewing these initiatives and the regional stock markets at this time in the Middle East, and how a founder should kind of think about those compared to, going public on the London Stock Exchange, as you mentioned, or even the New York Stock Exchange and the NASDAQ, and how you're thinking about those right now.
I think the region's capital markets are under development, and they're growing very, very fast. We've seen several success stories recently. And I think that's really good. I would just question why any founder wants to go public. So am I having lived that journey? I'm just kind of like, no, that is not something that I would ever repeat. So for me, I'm just kind of like, yes, I get it. I think every stock exchange has its pros and cons. The region doesn't have the liquidity we would like it to have. The region is much more of a retail stock exchange rather than institutional, which, has its pros and cons in and of itself. However, if you go international, you could end up being an orphan stock, which is really likely, and you're competing with companies that are much larger than you, and you're competing for coverage. So it's very, very different. It depends on the type of investor you're looking for. It depends on why you want to go public. It depends on how much of your time you want to spend running a public company versus how much of your time you want to spend building your company.
Yeah.
Right. And I just think that the decision to IPO is one that, or the dream of an IPO is one that gets sold very early in a founder's life, and is often one where people rarely take a chance to step back and take a full view and say, do I really want to do this?
Mm.
I just think it's so much of drinking that Kool-Aid. I would any day opt for a 20% discount on the valuation and transact.
Mm.
And I just think that that is a much cleaner way to exit as an investor, a much better outcome as a founder, right, and a much more stable result.
Mm-hmm.
All right.
Mm-hmm.
Again, not a very popular view, but speaking from experience.
It's interesting. Well, I'm here actually in Milan right now for an Endeavor event, and we opened it up with sort of the managing partner of Endeavor Catalyst opened it up today with this idea that, to be really good, you have to be kind of contrarian, and then you have to be right. And so I think it's like really those unpopular ideas and more or controversial ideas that we love to talk about at Endeavor, and in these communities. So yeah, it's really interesting to hear. I think going back a couple steps or two, I think this, there is a lot of attention on what founders should expect in terms of valuations in the market. You touched on earlier how founders have an option. They can try and, raise these bridges to get more capital in the business, depending on the timing. They can also shift to a more profitable model to give them more runway and security in that. There's two questions here that I'll read that I put up. What are the expectations? What expectations do you have in the region for Series A startups in terms of profitability? And then I think the second part of the question is something that I'd like you to expand on more as well. But is that something that will readjust once the markets become better? In other words, how much of this shift in sentiment do you think is here to stay, or do you think is more temporal to the market conditions? And what will really kind of carry on in the market going forward?
Well, I like data. I'm just a data-driven person. In case you haven't noticed all the numbers I spew out. But ultimately, I think last quarter we hit, 2019 levels globally, right, in terms of valuations and something right? Which to me means that we're back to reason. Right? Because for me, anything that happened between 2019 and early kind of 2022 was just nonsensical. Right? And we've seen that movie before, hence we did a bunch of exits, right? So for us, it was just kind of like, yes, this makes no sense. And everyone said, no, but this time is different. And I had a professor once in university, because I graduated in the dot-com bust. And I had a professor that, would say, every time someone says this time is different, know that it's the end. That's it, you're done. Because it's never different. Not in the 2000 dot-com bust, not in the 2008 real estate crisis, financial crisis, and not in 2021, 2022. So for me, the fact that we're back to 2019 levels and stable there for 2 quarters means that we finally gone back to historical, reasonable, fair valuations. So for me, today's valuations, and again, the region is still a little bit hyped in my opinion, but today's valuations of non-AI companies, I need to clarify that, are pretty much within historical norms and fair, right? And I hope that they don't go sky high like they did a few years ago, not because I'm a mean, evil VC, but because I'm like, this is like in line with the industry for many, many years, right? And therefore, this is what normal looks like. And I hope that we have gradual, sustainable growth. Again, unpopular.
Do you see that playing out differently? And, you know, with the context that you are an early stage fund, how do you see that playing out differently kind of in earlier stages, Series A, towards kind of later stages? And if you see any differences there in terms of where the market is currently, and how sort of earlier stage founders should think about the market evaluations versus later stage founders? Or do you think they're both kind of at a place that has returned to reasonable?
I think everything's returned to reasonable. I think Series A companies are going to struggle because a lot of seed companies were overinflated, and now they're Series A companies, and you're going to have this massive discrepancy. And that's just got to be about how much can you catch up with your valuation in terms of operations and numbers.
And then you touched on, I mean, you know, the question of AI. Clearly, that's one where there still kind of is more hype, and still loftier valuations are getting attributed to those companies. Do you see other sectors that have been kind of more or less impacted at this time?
I mean, I think SaaS was unfairly punished, but it's come back.
Okay.
I think that anything touching ag tech is nice and richly valued, regionally or globally. I think fintech was penalized a lot more internationally than it was in the region, and therefore in the region it's still somewhat very richly valued. Yeah, that's it.
Okay, that's interesting and helpful. This is a question I think more specific to your guys' investment thesis, and then I think we can wrap up with one more question after this. But just in terms of how you guys think about your thematic approach, you know, this question is asking, fintech has changed a lot since Global Ventures' first fund. How do you guys think about kind of, how do you guys think about the sector now, and where you're seeing it now versus when you kind of first made a lot of those initial investments?
So, I mean, we're always agnostic, right? So 40% of the fund became thematic, but then the remainder 60% remained agnostic. We're actually about to do our first fintech investment in our third fund. I think fintech, you know, we've always said that there's the consumer side of fintech, there's business fintech, and then there's infrastructure fintech. And I think, you know, 5 years ago, a large part of it was infrastructure fintech and consumer fintech, right? And some business fintech, and it's kind of all worked out. I think several things when it comes to now. I think now it becomes more like, how do you take those technologies and apply them to market segments? Right? And not like banking the unbanked, but rather like we're about to do an edu-wealth investment. So how do you think about edu-wealth? Right? And kind of how do you market that globally, right? From the region. And that's an interesting value proposition. So really back to solving real problems, edu-wealth being like, how do you pay for your child's education if you're in the middle to lower class in global markets? Right? So sort of like that is a fundamental question that today, if you're a tech-first fintech or wealth platform focused on that niche, that's massive. So back to like, how do you use cutting-edge technology to solve problems that affect hundreds of millions of people? And I think fintech is now in that category. It's no longer about let's build the building blocks of infrastructure, business fintech, consumer fintech. Those now exist. Let's see what fintech can do to solve massive problems.
Okay. Interesting. Okay, this is a quick question. So I think you can answer it live. And then I have one question to wrap us up. How are you thinking about the rule of 40 currently? You know, people like, there's a lot of conversation about managing growth versus profitability. How are you thinking about that personally? How valuable is the rule of 40 to you? How are you thinking about it?
I honestly don't think about it. Okay. So I mentioned a quarter of our portfolio is EBITDA positive. That's not our design. That's the founder's design. A lot of these SaaS companies, it's like, you know, let's slow down the growth rate. Let's, you know, increase our EBITDA. And I'm just like, listen, in 3 or 4 years, this is where you guys can be. And how you choose to get there is really on you. we've also seen in the last year specifically, and the reason that I don't think about it is we've seen in the last year, a lot of our companies integrate AI. And as they've integrated AI, they've managed to leapfrog a lot of the international companies that haven't, and a lot of these AI startups that don't have access to market, consumer, anything. So they've had to just take a pause last year and be like, this is game changing. How do I use this to build something even more awesome than I was planning on building? And we've seen it now in about a dozen companies in our portfolio. And so if we were so focused on the rule of 40, you can't give the founders the space to do that because you're so hung up on what's your revenue growth, what's your, what are your margins and so on. You actually have to, as the investor, say, okay, you know what? I get it. This is game changing. Go do your thing. Right. And then we'll come back to this when it starts to matter again. But that space is really important.
Okay, well, Noor, this has been amazing, so insightful and enlightening. I think to end us somewhere positive, you are clearly an optimist, and so I'd love to hear about a trend in the region that you are kind of the most excited about and the most hopeful about, even if maybe it's not, that close to being realized. Where you find a lot of hope right now, or trend, something that you're very excited about looking forward.
Goodness, I'm excited about so many things, Margaret. I covered supply chain tech. I covered food security. I think supply chain is super exciting right now. We've looked at a couple of investments. We're doing a few more. I think trending wise, I love what we're seeing in entrepreneurship and the ecosystem and more people starting great companies and solving real problems. I think the one that I'm hopeful about that we haven't really touched on, not on this webinar, neither in our portfolio, is really energy tech, right? When we take a look at the world, you have 760 million people without power. 700 million of them live in the Middle East and Africa. So I'm hopeful that, we solve the problem because it affects us the most. And I'm optimistic about it because we've seen the region really bring in some of the best clean tech and energy tech in the world, and the cost of doing that in this part of the world is lower than anywhere else because of where we happen to sit. So I'm hopeful that in a couple of years, the conversation will be about, what Series A companies are really empowering this part of the world, and where can we export that to?
Yeah, we had actually maybe one last question from the chat to build off of that. But there was a question specifically about SaaS startups for energy management, carbon zero, sustainability-oriented solutions for the MENA region, and the globe for the existing energy crisis area. So if there's anything sort of you would add kind of on that final note.
Yes, email me. So send them over. We're super excited about the space, but we're not seeing enough there that has enough traction for us to get behind. So prove me wrong, email me, and that'll be a really good conversation.
Awesome. Well, thank you so much, Noor. Ali, I don't know if you want to come back on and wrap us off, but Noor, thank you so much for taking the time. This conversation was incredible, and so insightful to hear your thoughts and views on the market right now.
Thank you. Thanks, Margaret.
Thank you so much. Thank you, Margaret.
Thanks, Ali. Appreciate it. Bye.
Bye, everyone.